How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. And today we're going to be talking about Opendoor Technologies. You guys know these were one of my high conviction plays. When I was talking about to load up, it was at the $14 range, and as well as when it was at the $15 range. And look where we have gotten so far, seeing some recent highs of $25. Many of you have told me you have taken profits. Congratulations to you. But I still do believe in the long-term prospects. I'll talk about it more in this video. I won't waste any more time. Let's jump into the agenda. If you're new to this channel, I just want to let you know we have timestamps down below inside the description. But if you're a shareholder or you're thinking about taking a position, I highly suggest you watch this full entire video. So the first thing we're going to go over is the technical analysis. We're going to be taking a look at the overall price action. We want to know support. We want to know resistance. Those key levels, because you want to make sure if you are thinking about taking an entry, you're getting in at a good price. And then we're going to go on Fintel, taking a look at the recent institutional ownership and as well as the short interest information. You know already, when it comes to the short interest, it can have an impact on the way the stock performs, and this is why we cover it. And then we're going to be taking a look at the order flow distribution. We want to know what the buying and as well as the selling behavior was like on the retail side and as well as on the institutional side. And then when all of that is done, we'll be going into the final thoughts and as well as some more details, so let's get to it. So we're going to be doing a technical analysis for Opendoor Technologies. Let's see how it performed on Friday. So ended up closing at $22.32, being down 6.77%. On the low, it tested $21.68, and then on the high, testing $24.16. When we take a look at the volume stats on the day, you can see we traded at 16.93 million shares, and then for the average volume over 10 trading days being at 15.642 million shares. So we did have above average volume on the day, and we did deal with a good amount of selling pressure. Now, when we take a look at our chart, which is the 1-year daily chart, you can see from the RSI down below, it is right around 50. So we're right in the middle there. And then when we take a look at the moving averages on our chart, we have strength above the 100-day, the 200-day, the 50-day, and as well, you can see we are below the 21-day EMA. But one of the things you want to take notice of, Opendoor has been on quite the run. When I was talking about loading up on shares, it was in the $15 range and as well as in the $16 range. And we've gotten all the way up to here, seeing highs of $25.35. So I know some of you have told me you have taken profits and so forth. I've taken profits as well, and I've also been holding some shares. But one thing that is very clear, it is looking bearish at the moment. They do have earnings that is coming up on November the 10th. So if it does decide to pull back further, I'm going to be looking forward to seeing some support right off of this 50-day at $20.79. I feel like that is an area we should be able to hold. Now, as far as where we do have some support, which was shown on the Friday, was right around $21.68. So will this continue to hold leading up to earnings? Hey, we're going to have to wait and see and find out. But one thing that's also very clear, we do have an area of resistance here right at this $24 level. We ended up testing $24.16, but for us to get back up there, we're definitely going to need this buying pressure coming into the stock, and if they're able to release a really good earnings, I can see the stock going to $26 plus. You can also take a look at what happened when they did their last earnings report, when they ended up having a beat. There was a pretty big jump inside the stock, and then after it sold off, and then after that sell-off, it just started continuing on its uptrend. So this is why paying attention with earnings is going to be very key for Open, and I'm going to make sure to keep a close eye on it myself and keep you guys updated. So we're going to take a look at the recent institutional ownership and short interest information for Open. So scrolling down further on the page, green rows indicate new positions while red rows indicate closed positions. So what we're going to take a look at are filing dates for November the 5th. So we have IMC Chicago LLC with a closed position. We also have Griffin Asset Management with a closed position. We also do see a new position from Moores and Cabot that purchased 34,000 shares. We also have Limbrook Capital with a closed position as well. And let's take a quick look at what's been happening for the 4th and as well as for the 3rd. Looks fairly bullish there, right? So we have capital analysts that went in with 4,610 shares. I know what you're saying, that is definitely not a lot. And I agree. We also have Dutch Bank that went in with put contracts. And we also have Van Eck Associates Corp purchasing just over, not even just over, sorry, I should say 78,643 shares. And we also have CPO that purchased just under 11,000 shares. And we have Dunker Street and as well as Spectrum Management, small positions with 100 shares and also 150, along with Herald Advisors going in with 300 shares. Now, when we take a look at the short interest, the dark pool short volume ratio is at 36.59%, and then for the dark pool short volume being just over 2.1 million shares. Scrolling down further on the page, the short shares availability is at 9.5 million, updated 20 minutes ago, and then for the short ball free rate, it is at 0.32%. Now, when we take a look at the history of the short volume ratio, we can see for the close of November the 4th, it was at 40.79. So that was the Thursday that just passed. And then for the Friday that just passed, it was at 36.59. So it has gone down quite a bit, but do keep in mind, Open does continue to have short squeeze potential, and it's part of the reasons why there's a lot of volatility in this play, and it's something that you have to be prepared for. So now let's jump into the order flow distribution. Now let's take a look at the order flow distribution for Open. So you can see here on the inflow, it was at 64.91, and then on the outflow, it was 87.19. So we ended up having an outflow day. And you could see on the large, it was 3.43. On the medium, it was 24.58. And then on the small, it was 36.90. When we take a look at the outflow side on the large, it was 3.58. On the medium, it was 33.64. And then on the small, it was 49.97. And all of these are in the millions. When we take a look at the large scale orders in the last 5 days, you could see for November the 5th, it being an outflow day, not a big difference there, of negative 0.16. We also did see this on the Thursday as well, with it being negative 19.36 million, and then the 3 days prior to that were all inflow days. When we take a look further at the breakdown, we could see there was a lot more selling on the retail side. We also did see a lot of selling on the medium side, and we also did see a little bit more selling on the institutional side. So keeping this in mind, of course, with Opendoor's earnings coming up, I'm not surprised with the volatility. And now when we take a look at the turnover ratio here, it is at 2.80%. So anyone that's in this play for the long-term prospects, this is really good to see. Many people who are holding shares are holding on to them. And then to go even further, as far as taking a look at the breakdown of shareholders, we could see it here. It is at institutions own 64.66%, corporations own 8.87%, insiders own 9.06%, and as far as others are concerned, so to the retail investors and traders own 17.41%. That's what's available. And then when we take a look at the recent institutional activity, they have decreased their positions to 0.91%. But keeping this in mind with these numbers, there's a lot of institutions who are vested in Opendoor. So if you're a long-term investor, this is definitely great to see because institutions are bullish, especially if you were able to get into a position when the stock was under $20. So now let's jump into the final thoughts and we'll go over some more details as well. So for my final thoughts for Opendoor Technologies, I'm still going to continue to remain bullish on this stock for the long term. And the reason being is this company is aggressive. I saw that they're looking to actually get into the Canadian market. That's number one. And then number two, they ended up acquiring a digital mortgage company by the name of Red Door. I like that. Red Door, Opendoor. But aside from that, that just shows you how aggressive this company is. And also on top of that, we did have Zillow that recently exited out of the iBuyer segment. So what does this mean? This gives Opendoor a bigger piece of the pie. So with all of that said, this is why when it comes to particular plays like these, you have to do your homework and you have to do your due diligence. Also on their past earnings report, they've been able to do pretty well. So if we see a continuation of that, then of course I'm looking forward to seeing a strong move from the stock. It could pull back even further, but if it does decide to pull back, I will look at adding to my position. Like I was saying, I was adding in this play when it was in the $15 range and as well as in the $14 range. So if it decides to pull back going under 20, I would look to add more. But do keep in mind, with a stock like Opendoor, I should talk about the company as a whole and the business that they're in, they are affected by interest rates. So if interest rates do go up as far as demand for housing, of course that's going to go down a bit. But from what Opendoor said recently, well, I shouldn't say recently, these were some months ago, they said that they can flourish in any market. So that would be something I will be keeping an eye on for this earnings report that is coming. But due to the fact that the housing market has been pretty good, I'm looking forward to seeing an earnings beat. If we don't get that, I'm perfectly fine with that because I do believe this company is going in the right direction. As far as going on Fintel and taking a look at the short interest information, it still continues to have short squeeze potential. There's a lot of negative market sentiment around the stock. What this means, short sellers are saying, hey, the price of this stock needs to come down. And I can perfectly understand that due to the fact that they are not profitable. And this is one thing we have to keep in mind. This is a growth stock and there's going to be a lot of ups and downs. But I'm willing to actually ride that through because I know what this stock is all about and I can see it appreciating in the long term. So let's see how Open does for their earnings that is coming up. And as far as for the technical aspect of things, I know there's opportunities for traders, so give the play a look. So I hope you enjoyed this video and we'll be talking real soon.